Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati. And in today's market, the 10-year G-Sec yield crossed 6.9%, the highest levels, obviously, in in more than 2 years. And while the equity market, Sensex Nifty, closed positive, clearly indicating that the union budget, which was presented yesterday to the parliament, was positive for equities and negative for bonds, and the rupee itself was marginally down from yesterday's levels, uh, uh, though it's not too much of movement was seen in the rupee. And in the global markets, the US 10-year yield was at 1.78%. This has also come down from very high levels of 1.85%. And more importantly, inflation in the global world is more rising very sharply. Eurozone inflation crossed 5%, the highest on record, and looks to be continuing to rise. And where the Fed, in its policy last month, had indicated that inflation is high and they are uncomfortable, and interest rates have to be taken up, and they are starting to hike rates in March. Maybe other central banks will start to follow. And the question is when the RBI will start to follow. RBI's policy meet is next week, and it'll be interesting to see how the RBI manages its policy because they have a two-pronged. They need to worry about how to manage a huge government borrowing along with the state government borrowing, and also they need to manage inflation. And with the government spending heavily, inflation can rise, and the fiscal deficit, while being shown at 6.4% of GDP, is still very high. Um, and at these levels, it can still potentially take up inflation very high. And should RBI penalize savers to protect the government in bond interest yields? So that's a question that you'll have to ask yourself. But investors are clearly not wanting to own bonds. They are selling government bonds, and the bond yields are moving up very sharply. The 10-year yield has in the last 1 year has risen by 1 year from lowest has risen by almost 1% or more than 1%. Uh, 100 basis points, as you say it in bond terminology. So it's a difficult period, and I think interest rates are going to rise, and investors will have to look at investing in a rising interest rate scenario. Thank you very much for listening in, and download our Quick Invest app from INR Bonds, in iOS and Android. This will give you the right bonds to invest in a rising interest rate scenario. All you need is to download the app, look at the bonds, and click on the Invest Now button. Thank you very much. It will take you straight through an investment, take you through the investment in the bond. And obviously, you will get all the information that you require from the app. The download links are there in the description below. Do not forget to subscribe to our YouTube channel if you have not done so already, and do press our like button. Thank you very much.